Or if you want to know more about investment strategies and how to avoid certain mistakes, subscribe to Be Rich Formulas. If you could see the next 6 to 12 months of the stock market, would you take the shot? Goldman Sachs, Black Rock, and some of the biggest brains on Wall Street are making bold calls. And today I'm breaking them down, showing you which sectors could explode and exactly how to position yourself if you trade individual stocks. Today isn't just another market prediction video. As you know, no one can predict the future, and my videos are for education only. Now I am going to give you the top forecasts from the biggest institutions and a real-world action plan for moderate risk traders like you and me. We'll cover what the S&P 500 might look like in a year, the hottest sectors to watch, and the exact stock names that analysts are quietly loading up on. Let's get into it. Let's start with the big picture. Goldman Sachs now projects the S&P 500 could climb about 6% in the next 6 months, hitting around 6,600, and potentially 11% higher in the next year, reaching 6,900. That's not a to-the-moon call, but it's steady growth in a high-rate environment. BlackRock is also optimistic, staying overweight U.S. equities. They believe AI will be the secret fuel keeping earnings strong. Fidelity, they see a range-bound market, meaning we might be stuck in a trading range with opportunities to buy the dips and sell the rips. So, what's driving this optimism? The Fed is expected to cut rates, not aggressively, but enough to lower borrowing costs. Earnings growth is holding up better than many expected, and the US economy, while slowing, is still outpacing Europe and China. Now let's talk about where the money could actually multiply. The sectors: software and AI ecosystem. Goldman Sachs is overweight here. Think Microsoft, look at that chart here. Do not forget, or Amazon. Those stocks have been performing very well, without forgetting Nvidia, one of the best performing stock in the last few years. But it seems there is more to come for that stocks and that sector. Not just because they're big names, but because they're driving the AI revolution. Cloud computing, machine learning infrastructure, AI-powered applications. These aren't fads, they're becoming core business tools. Utilities. This might sound boring, but utilities are getting an AI twist. All those data centers powering AI need electricity. Utilities that can scale and supply that power could see steady demand. Materials. From infrastructure to high-tech manufacturing, materials companies are benefiting from government spending and global supply chain shifts. Real estate, select plays. Goldman even has real estate on their overweight list. But here's the catch. Not all REITs. You want quality operators with strong balance sheets, possibly in data center REITs or industrial storage. Media and entertainment. Ad spend is recovering and streaming platforms are starting to focus on profitability, not just growth. That could mean stronger margins for leaders in this space. If you prefer stocks over funds, here's where analysts see real upside. Microsoft, MSFT, Amazon, AMZN, Nvidia, NVDA, core AI and cloud leaders with consistent earnings beats. Colliers International, CIGI, a real estate services company with 26% earnings growth and 18% revenue growth. Analysts love its fundamentals. Danaher, DHR, a diversified science and technology leader with 25% upside potential. S&P Global, SPGI, a data and analytics giant with 11% upside tied to financial market expansion. Howmet Aerospace, HWM, benefiting from aerospace demand and infrastructure spending with 13% upside potential. For a moderate risk trader, this is a nice mix: high quality growth names, a real estate play, and an industrial growth pick. Of course, there's no free lunch. Here's what could derail these forecasts. The Fed could keep rates higher for longer if inflation sticks. Geopolitical tensions, especially in key commodity regions, could spike volatility. Market breadth is still narrow. If mega-cap tech stumbles, indexes could take a hit. That's why you don't go all in on one idea. You build a balanced basket that matches your risk tolerance. So, here's your action plan if you've got moderate risk tolerance. Anchor your portfolio with 2-3 mega cap AI tech leaders for growth. Add 1-2 diversified growth names like Danaher or S&P Global. Keep a defensive hedge in a utility or healthcare stock. Trade around earnings and macro news. Don't just buy and forget. On the next video after tomorrow, I am going to give you more analysis about those stocks. I will include entry prices, targets, and how to protect your positions. Stay tuned. Hey guys, subscribe to the channel. I would like to see you soon. Disclaimer: the content provided on the Be Rich Formulas channel is for educational and informational purposes only and should not be construed as financial, investment, or trading advice. All views expressed in this video are solely those of the presenter and do not represent the views of any affiliated organizations or entities. Investing and trading in financial markets involves substantial risk, and it is important to understand that past performance is not indicative of future results. The content provided does not guarantee any particular outcome or return on investment. You should seek advice from a qualified financial professional before making any investment or financial decisions. The information shared on this channel, including all strategies, forecasts, and predictions, is based on the presenter's personal knowledge and experience. However, this content is not intended to be and should not be relied upon as specific advice for any individual or entity. Any decisions you make about investments, trading, or other financial actions are solely your responsibility. We do not recommend or endorse any particular investment strategy, product, or service. Please do your own research and consult with a licensed financial advisor before making any investment. Risk warning: all forms of investment carry risk, including the potential loss of principal. The use of leverage or margin in trading can magnify gains and losses, and it is crucial to have a proper risk management plan. Never invest more than you can afford to lose. U.S. federal law compliance. We comply with U.S. federal laws and regulations related to investment and trading, including those enforced by the U.S. Securities and Exchange Commission (SEC) and the Commodity Futures Trading Commission (CFTC). Nothing on this channel constitutes a solicitation, offer, or advice to buy or sell any securities, options, futures, or cryptocurrencies. By watching, you acknowledge that you understand and agree to this disclaimer. Please note that the content provided is not intended for audiences under 18 years of age.